All right, welcome back to Market Day Report. I am Scott Shellady. Glad to be with you, and a Happy New Year. Hope you had a great break. I did. But we're back in the saddle, and it feels good, doesn't it? Let's take a look and see how these markets are, because that's kind of ruining that good feeling. If we bring up a corn board, that'll show us what I'm talking about. We're off here by about 8.5 cents. This is where we were the last time we got together. 462 3/4 is last in March corn. That's down 8.5 cents, and that's just to tick off the lows. We've had a decent range over there by about 8 cents, so there you go. We're 8 1/4 cents lower now. 463 evens last, a half cent off the low. May's down 8 cents, 476, and that's just a tick off the low of the day there. So corn trading on its heels. Can't say anything else different than that. How about the soybeans? They're coming back a little bit, right? March beans down 24.5 cents. That's the bad news. The good news is we're about 6 cents, 6 1/4 cents off the low of the day. So we've bounced back a little bit here, and this is actually a little bit better than it was even the last time we visited. So we've tacked a penny on as far as to the bounce. Again, we're only 24 cents lower now to 12.74. So that's some pretty good going. 6 3/4 cents off the low of the day, and we've had about a 23-cent range. So there you go. Maize down 26 1/4 cents at 12.81. How about soybeans in Chicago? We go to wheat in Chicago. What does that look like? Well, that's lower. And that's a March contract down 17 cents to 6.11. A tick off the low of the day there. So again, wheat in Chicago trading on its heels. Maize down 16 1/4 cents to 6.23 1/4. And we've had a 17-cent range. So that'll give you an idea about where we stand there. If we move from wheat to in Chicago to the hard red in Kansas City, that too is down 12 3/4 cents to 6.29 1/4. 3 cents off the low of the day. And we've had about, what, 16-cent range? So there you go. Maize down 11.5 cents to 6.32 1/2. Let's move over to the spring wheat. What's that got going for us here? This is Minneapolis. That's down 7. 7.16 1/2 is last, and that's the March. And then we're about 3 cents off the low of the day there. And we've had only about 8-cent range. So spring wheat a little bit more quiet than the rest. 6.5 cents lower in the May right behind it. 6.26 or 7.26 is last. Finally, let's get to the cotton. We'll get to our next guest analyst. Cotton's down 111 points to 79.89, and that's the March contract. We're only 9 points off the low of the day. We've had about 185-point range. So there you go. Let's bring in our next guest analyst, and that's going to be Tommy Grisafi. Tommy is in Valparaiso, Indiana. He's with Advanced Trading. Happy New Year, Mr. Grisafi. Great to see you. Hopefully you had a great break. Not a good day for the grains, is it?
I will say this. I like the hard opening today. The markets overnight are becoming thinner and thinner. And I like that all the buyers and sellers had to show up at 8:30 and make a decision. You had to show your hand. You had to come to the table. We had an opening call. It kind of reminded me of the days when we go on the floor and you didn't know if corn was going to open 3 higher or 5 higher. And you had to place your order accordingly. But they came out with hands out today, selling them. And that's weather in South America. Now, one of the things that a friend of mine had told me, and I stole the line from him, but he said, be careful betting against it not raining in a rainforest. And that's what's starting to happen in South America is it's raining and they are planting so much ground down there. And the rest of the world's getting caught. I mean, to think that the Ukraine is only producing a part of what they used to, and grain prices are literally collapsing in the first day of 2024. Now, real important, you understand this from your experience in trading. It's not so important what the markets did today. It's really important on how they close the week and how they close the month. And yes, today we are down, but let's see where we are on Friday. I'll be back on the show with you again Thursday. By then, this may just all look like a bad dream here in the rearview mirror. In the meantime, if you were an end user, you'd think you'd be buying them. And this would be a really good value area, especially if you're a major country or just an end user domestically here who needs grain. So a little something for everyone. Probably not the way the farmer wanted. Real quick, Scotty, before you come back in, today is National Pick Up Your Check at the Grain Elevator Day. Congratulations on deferring that income to 2024. Back to you, my friend.
Well, I mean, it's there's as you speak. I looked at beans again. There's nothing there with a 13 in front of it, so that's going to be hard. And same with corn and a 5 in front of that, nothing there either. It seems like more and more these markets are just trading kind of heavy, and that's a sentiment thing as well as maybe just a weather thing too. Is there any way that we shake out of this? I mean, are we all going to be putting our chips on the January report?
I don't know about so much with the report. I feel that could be bearish. What would be great is if we had a little bearish report and rallied out of it. That's a really fun price day when you get a negative report and then you close firmer because the worst of the news is out. The most bullish thing I see is the funds are short. When they go to cover, it gets ugly. We noticed a little of that in wheat towards the end of the year on that dollar rally in wheat. There may not be much for sale when we pop. Other thing to watch before we go on break, folks, check your local market. You don't get to sell the Board of Trade price. You get to sell the local cash price. Bids for beans all along the Illinois River trading plus 25, plus 30. So as this market drops, the cash market, the basis, combine those together. Check your cash market. Things might not be as bad as the Board of Trade looks. Back to you.
All right, we're going to go away. Great stuff. We're going to pay some bills. We're going to come back and talk more with Tommy Grisafi. He's with Advanced Trading in Valparaiso, Indiana. We'll be right back. All right, welcome back to Market Day Report. This is the part of the exercise that's going to give you a little bit of a smile on your face. We've got some wind beneath the wings when we talk about, or at least our cattle. Let's start with that live cattle board in Chicago. Let's see what that's got in store for us. And it's got a gain here. February's up $3.25. 171.75 is last there. Well off the highs of the day by almost a buck. So we were even up a lot more than this. So we had a 4 in front of that at one point today. April's up $1.97 to 174.22, now 25. Moving from the live cattle to the feeders. This one also is higher. We got a lot of 3s out there. It's come back off its highs, though. March is up $3.27. 226.37's last there, and that too is about $1.60 off the highs of the day. $1.55, really. We're $3 higher in the April to 231.90. So feeders also doing well, but kind of settling back in as we speak. And then lean hogs, they started to take a turn for the worse, and they still are. We've got that Feb board down $2.52 to 65.45, and that's only, I'm going to call that 30 cents ish, or 25 cents off the lows. $2.20 lower in the April, behind it to 72.65. Let's bring back in Tommy Grisafi with Advanced Trading up in Valparaiso, Indiana. Tommy, good day for the cattle, but not so much for the hogs.
Yeah, cattle, it was nice to see them open. They probably looked over, noticed grains and everything else were trading down, but there wasn't a lot for sale in the cattle. Just like we talked about that sometimes the grain markets are a little thin, it was not very hard to push this market up. And we did have some clients who came in at these levels and started to be hedgers, but they said if live cattle rally another $3 to $5, they'd be aggressive hedgers around that 200-day moving average. That may be even a little higher, but there are people, the sell-off really affected people. Now, when you look at the chart, it looks like we bounced a lot. We're only like a quarter of the way back on this big down move if you look at how high we were versus where we were. So if we can get halfway back, that'd be great. Now, as far as hogs, that market ended the year poorly, and it's just continuing. The margins and the bloodbath in the hog industry is it's tough, and it feels like it all kind of started, Scotty, when they started popping off in California and telling you how we need to raise meat, and very powerful. A small group of people are very powerful, and they're affecting hog producers' lives here across the Midwest.
Yeah, well, that starts today. I mean, there could be a little bit of a hangover there. That's something that I was going to be wondering about, but you answered our questions for us. So you're a mind reader, too. Thank you very much, Mr. Grisafi. Tommy Grisafi, he's with Advanced Trading in Valparaiso, Indiana. Thanks for coming on the show, Tommy, and I'll bring it back home and hand it back over to Suzanne.
Thank you so much, Scott.